It's Memorial Day weekend, of course, and as investors will prepare to enjoy the unofficial start of the summer, we're going to take a look at some of the stocks best positioned to benefit from, well, the celebrations this weekend. Joining us is the BofA's Liz Suzuki, Bank of America research analyst, who has a report out today and the buy-rated stocks she recommends on the back of, well, maybe a bit of a wet weekend in the Northeast, but we're not going to be New York-centric about this. We're going to think across the U.S. Are people going to be out barbecuing on their deck? Are they going to be looking at new furniture and the like?
Yeah, that's right. So heading into the weekend, we really wanted to think about the ways in which the U.S. consumer is preparing their home to host a get-together, maybe adding some furniture out on the patio, or stocking up the fridge and the cooler with some drinks, maybe even getting out on the road and taking that first road trip in a long time, or refreshing the summer wardrobe for an actual vacation. So we wanted to think about those stocks that are tied to this theme while also being, longer term buys. We have 12-month price objectives and ratings. So these are stocks that we already liked for a number of fundamental reasons, but that are also, potential beneficiaries of the Memorial Day weekend activities.
Well, with regards to at least some of the actual durable goods out there, I mean, there's a sense here that some people might have already bought all those things during the pandemic. They bought a new grill or put in a new deck, put in a new pool, if you will. Is there still a little bit more left there for some of those durable goods?
Sure. Yeah. I mean, Home Depot and Lowe's just reported earnings a couple of weeks ago, and both of them cited really strong demand in seasonal and outdoor living categories, including grills, still really a popular category. So anyone who didn't buy a grill last year is apparently buying one now. And those that have, recently moved, right, there's been a lot of housing turnover. And so a lot of new homes have been formed that are now starting to make those improvements as well. And there's still a pretty big backlog of these larger projects. I mean, you mentioned pools, right? Pool installations take a long time to get permits for, and so there's a massive backlog of demand there, as well as larger renovations like kitchen remodels, bathrooms, things that require a professional. And I don't know if either of you have tried to hire a contractor in the last couple months, but it's very difficult. There's a ton of demand and not a whole lot of supply. So there's that backlog continues to build, which means that there will be a long runway of growth potentially for these home improvement retailers.
My husband and I are literally having this conversation at the moment, and we're being put off till 2022 at the moment, the start, and we were quite pleased by that, let alone thinking it would be pushed off into the deep nether regions of 2022 and beyond. Yeah. But where isn't looking so pretty right now, Liz? Where has perhaps already seen the demand and we're moving past it, or had seen the stimulus check bounce and we're moving past it?
Yeah. Yeah, I mean, I think we're starting to see a couple of areas where some of that demand could be starting to wane. So, in some of the discount retailers, for example, where they had the most stimulus benefit and are, now seeing some of those, tailing off in that demand. But, I think an area that actually gets underappreciated is the auto parts retailers and the auto service industry. So, obviously people weren't driving that much last year. As we think about going into the weekend, you're going to see a lot of traffic this year that wasn't there a year ago. And so a lot of cars are going to need service that, that didn't before. And miles driven were down about 13% last year. So there's still a lot of runway for recovery, not just, in the next year, but beyond. And so the auto aftermarket is really going to benefit from that recovery in a big way. And I think that the space doesn't really get as many eyeballs as we think it should.
All right, let's talk about the fun stuff here. A lot of us are going to do a lot of drinking this weekend. For some of us, that'll be new. For others, that'll just be a normal weekend here. When you look at some of the companies here, like Constellation Brands and Napa and some of the others here, what's your general outlook there?
Yeah, so our food and beverage analyst has highlighted in this note both Coke and Pepsi as as good providers of the non-alcoholic beverages, but then also Constellation Brands on the beer and hard seltzer side, and Duckhorn, which a ticker is Napa. So it's recently public company that is in the wine space. So for whatever you want to fill your cooler with this weekend, there's a stock for it.
A Napa Valley-based one as well. I mean, don't get us started on the hard seltzer. That's still very much in vogue at the moment. And I know Taylor is just a seltzer kind of a girl, but hard seltzer is where it's at. Where else do you think might, from developing into the autumn period and areas that some of your colleagues are thinking have been unloved? I love the way that you digged into the auto sector in particular, but where else can we be looking for this rotation trade to hit and perhaps be more focused for your area?
Sure. Yeah. The other analyst that contributed to the note was our apparel and soft lines analyst, and so she highlighted a couple of names that she's seeing a lot of recovery in, especially as people start going out again, and so demand for going out clothes is going up. So there it would be Levi's as well as Revolve, and so I think that these are names that have been really starting to reopen. They're a big part of that reopening trade, along with things like the auto parts and and other travel related names.